Welcome, listeners, to another deep dive into the intersection of technology, economy, and finance. Today, we're tackling a topic that's generating both excitement and skepticism across boardrooms and trading floors alike. The massive investment wave in artificial intelligence, AI, and the question of whether we're on the brink of another tech bubble, reminiscent of the dot-com crash at the turn of the century. With hundreds of billions of dollars poured into AI to automate workplaces and drive productivity, the stakes couldn't be higher. Yet, as adoption lags and concrete returns remain elusive, we're left wondering, will businesses see the payoff, or are we witnessing history repeat itself? Let's unpack this. Historical context, echoes of the dot-com bubble. Cast your mind back to the late 1990s. The internet was the shiny new toy, promising to revolutionize everything from commerce to communication. Investors threw money at any company with a .com in their name, valuations soared, and then, boom, the bubble burst in 2000, wiping out trillions in market value. Companies like Pets.com became cautionary tales of hype over substance. Fast forward to today, and AI is the darling of the tech world. Investment in AI now accounts for a staggering 40% of U.S. GDP growth this year, with over 75% of businesses worldwide using generative AI in at least one function. But here's the kicker. Only 1% of CEOs have a fully formed AI strategy, and a mere 10% of companies are meaningfully integrating AI into their processes. This gap between investment and execution feels eerily familiar, raising the specter of another bust if promised productivity gains don't materialize. Global impacts, a tale of two speeds. Globally, AI adoption is a story of stark contrasts. Tech giants and innovative startups are racing ahead, treating AI agents almost like coworkers, embedding them into product development and operations. Think of companies like Cisco, where AI is already streamlining platforms like WebEx, enhancing efficiency for employees. On the other hand, many traditional businesses, think retail or manufacturing, are still grappling with basics, struggling to get staff to even use tools like ChatGPT. This bifurcation creates a global competitive divide. Nations and companies that fail to bridge this gap risk falling behind, while early adopters could dominate markets. Moreover, the financial benefits are flowing disproportionately to tech firms, AI developers, and consultancies, leaving many adopters without the magical gains they were promised. This uneven distribution of rewards could exacerbate economic inequality if left unchecked. Sector-specific effects. Hype versus reality. Zooming into specific sectors, the picture is mixed. In tech, AI is a natural fit. Software engineering teams are reportedly shipping code 75% faster in some cases. In finance, accounts teams are processing invoices with 50% fewer errors. These are tangible wins, but they're the exception, not the rule. A sobering study from MIT Media Lab found that 95% of generative AI pilots in workplaces failed. Even in the S&P 500, where AI is often touted as a game changer in earnings calls, regulatory filings reveal a lack of concrete examples. Take Coca-Cola. They've hyped AI as transformative, yet their filings cite only a Christmas ad as a use case. Across sectors, the disconnect between rhetoric and results is glaring, with many companies treating AI as an abstract productivity booster rather than a tool for specific, measurable outcomes. This raises red flags for investors betting on broad-based AI-driven growth. The productivity paradox and training gap. So why the lag in returns? A major culprit is the training and capability gap. Unlike past tech rollouts where adoption could unfold over years, AI's complexity and the sheer scale of investment, unprecedented in history, demand immediate, skilled implementation. Many employees are using AI at the equivalent of sending texts on an iPhone, missing out on its deeper potential. Shadow use cases are rampant, where staff bypass official AI tools for personal ones, often due to poor communication from leadership. Add to this the fact that workplaces handle sensitive data, and AI's propensity for factual errors becomes a liability. Without structured data, robust cybersecurity, and AI-literate staff, companies are simply not ready for this digital transformation. Investment and policy implications. For investors, the AI boom presents both opportunity and risk. The S&P 500's growth is heavily driven by 7 tech titans, while other companies touting AI haven't seen comparable gains. This suggests a concentrated bubble risk. Investors should diversify beyond big tech and scrutinize companies for concrete AI outcomes, not just buzzwords. On the policy front, governments must prioritize education and upskilling initiatives to close the training gap. Programs like Google's AI Essentials course, which emphasizes practical, role-specific training, could serve as a model. Without such efforts, the economic divide between AI haves and have-nots will widen. Near-term catalysts to watch. In the near term, keep an eye on a few key catalysts. First, the release of new AI models every 6 months is shifting the marketplace. Watch how these innovations impact adoption rates. Second, earnings reports over the next few quarters will be critical. If S&P 500 companies start detailing specific AI-driven gains, confidence will grow. If not, skepticism could trigger sell-offs. Finally, look for increased M&A activity in the AI training and consultancy space as companies scramble to bridge capability gaps. Conclusion: patience, prudence, and preparation. Listeners, we're in the early days of AI, much like the internet's infancy in the mid-1990s. There's immense potential for disruption and excitement, but also room for boom and bust. Businesses must move beyond experimentation to focus on tailored training, staff input, and measurable outcomes. For investors, the mantra is caution. Don't chase hype, chase results. And for policymakers, the call is clear. Equip workforces for this transformation before the gap becomes a chasm. AI could redefine work as we know it, but only if we navigate this wave with patience, prudence, and preparation. Stay tuned for more insights as this story evolves.